Hello, my friends. How are you? My name is Tomasz Wiśniewski, and I am head of research and education at Axiori. Please confirm on the chat that you can hear me and everything is okay, that you see the presentation, you see the video, you hear me. Okay, beautiful. So, hello again. It is my pleasure to be here. Hopefully, we won't have any technical problems, so we will be able to talk normally without any disruptions, that you will be able to hear everything what I want to say. But please keep in mind that we are also recording this webinar, so you will be able to access the recording of this webinar. At the end of the webinar, I will show you the email address where you should ask about this recording. So don't worry if something will freeze for a second or your internet connection will stop. Don't worry about this. You will be able to watch this video again. All right, my friends, let's start. Quick introduction, because maybe we have new people today, so clients who are the first time with us. So I need to introduce myself a little bit better. Again, my name is Tomasz Wiśniewski. I'm head of research and education at Axiori. I'm a professional trader with 10 years experience, around 10 years. I first started on the stock exchange, then I moved to the forex market. I prefer swing trading, and format trading I use price action. And it's not only that I say that I'm a professional trader, but I teach, I do seminars, webinars, and when I do seminars and when I do webinars, I show my statement. I show my trades, that you are able to see my trades history, my results, right? So it's not like a random person is teaching you a person who read like 5 books or something and has no experience in trading whatsoever. It's not like this here in Axiori. In Axiori, they valued professionals. So that's why you have education, you have webinars with me or with my colleague, Mitun, who is also a professional trader. And you spoke with him on Wednesday, I guess, on the webinar about the trading platforms. Okay, my friends, let's start this fundamental analysis webinar. And also, I want to start with the question. So what is the fundamental analysis? Please write your answers on the chat. What is your idea about the fundamental analysis? What do you expect to hear when we are talking about the fundamental analysis? You say news. Yes, news is a good answer. Yes, sir. If it's your first webinar, you will be able to access those previous ones. Just wait till the end of the webinar. I will tell you where. Economic news, following news trends, company balance sheets, economical political news, history of movements. Okay, this is everything is fine. Yes, this is what exactly we are talking about. Maybe not trading history, not history of movements, because that's more about the technical analysis, but that's what you said, profit loss accounts, economic data, follow news and impact on currency. Yes, you are all right. So when we talk about the fundamental analysis, we can see at those factors. As you can see, we have many of them. So let's say we have numbers which are important for the economies, governments, like GDP, so gross domestic product, inflation. And we have policies of the government. We have policies of central banks. Here is RBI, which is Reserve Bank of India policy, as an example. When you trade on shares, stocks, you buy shares of the companies, you can look more on the financial analysis of this company, the general growth of the industry, economic analysis, industry analysis, company analysis. All this is fundamentals. All this is fundamentals. And my friends, for me, fundamental analysis is pretty boring, right? I don't like to read those news, and I don't like to get inside of this profit loss sheets, etc. So I will try to show you the fundamental analysis as interesting and as practical as it can get. All right, so today I will not bore you to death with the definitions of the GDP or inflation, but I will show you how those numbers affect the price movements. Okay, so we will focus on this, on those factors. So my friends, fundamental analysis in general speaking, this trading based on you knowing all the data and macro situation which is surrounding your asset. And some people call it more like investing rather than speculation, because they think that when you read those financial reports, you are an investor. But when you trade only based on the technical analysis, you see the pattern if the price will go up or down, you are not an investor, you're a speculator. But at the end of the day, we are all speculators. Okay? Some may say that fundamental analysis means that you're investing in value, and some may agree that fundamental analysis is more essential, more needed, more welcomed when you trade on stocks. That on currencies is not so popular. Well, it depends. It depends, really. What is the most important thing that in practice it's about trading expectations. Fundamental analysis is all about expectations. So markets, when they trade, they always expect something. Those smart guys after Harvard, Oxford, and Cambridge, they are constantly counting something and calculating data in order to forecast the future numbers. And based on this, banks, hedge funds, institutions, they trade. They trade the forecasts, they trade expectations. Once these expectations become the reality, one thing happened. Once those expectations miss the reality, other thing happened. And it's all about trading those expectations, guys. At the end of the day, it's all about this. But I will show you this later, obviously. You don't have to believe me for now. So fundamental analysis on our position as a retail trader is, for example, you looking at the numbers, and from those numbers you try to estimate if the financial situation of this stock exchange of this company is, let's say, better than the market, or is optimistic for the future. Or in terms of the currency, you try to analyze the inflation, interest rate, GDP, unemployment rate, and based on those numbers you try to estimate if the currency of this particular country will be stronger than the other currency of other country, where you also analyze gross domestic product, inflation, interest rate, etc. But the thing is that everybody already know this data. Okay, you have access, we have access to the data which is widely accessible. If you have access to the data from the company which nobody knows about it, that's a huge asset and you can use it in your favor. But the thing is that sometimes, very often, it's inside trading and it's forbidden to use this kind of information. The thing is that if you want to use this widely known and accessible information, it means that most probably you are a bit late and other traders already use this information. already made bets on the market, already traded this information. Okay, but that's also the theory. Because, for example, maybe I told you on the technical webinar that recently I created portfolio on a Polish stock exchange. I have 7 companies, and I use a bit of fundamental analysis. I analyze the price to earnings value. Then I compared this with the technical analysis, and I was able to find really amazing companies. One of them is up almost 40% in 3 weeks or 2 weeks. Second one is over 25% on profit in 2-3 weeks, which is a really great result, and it is based on the fundamental and the technical analysis. That's partly I answered your question, Dennis. I used P2E indicator. In general, the lowest P2E, it means that the stock, let's say, is underweighted. It's cheap, let's say like this, so it creates an occasion, let's say, to buy. So I picked the companies with the lowest P2E, and from 30 companies with the lowest P2E, I picked 7 with the best technical situation. So just this, it's not a rocket science. All right, my friends, and as problem with the technical analysis, with the fundamental analysis, is the same as the technical analysis. That sometimes it shows you one thing, but the market reacts in other way. Okay, so for example, you have rise in interest rates, which in theory should be good for the currency, should create the demand for the currency, so the currency should be stronger, should go up. But we have movement in the opposite direction. Okay, so sometimes it happens like this. That's why you always need to protect yourself with a defending order. And the thing is that you can totally trade without knowing fundamental analysis. I remember this till I'm gonna remember this forever. I had live trading sessions where I had webinars like this, but I was showing my platform and I was trading live, managing positions, etc. And I was on holidays, but I had commitment with the forex company. So despite being on holidays and having good time, I still made this webinar, and I didn't prepare for this webinar at all. Just connected to the internet. I didn't read any news whatsoever. I didn't know what is the situation on the market from the fundamental point of view, and that was one of the best live trading sessions ever. I think I made like 2,500 euros back then without reading news whatsoever. So I remember this till now, and I firmly believe that you can trade totally without the fundamental analysis. Okay. Thank you for explanation. The P2E ratio to one of the users. I missed this question, but yes, it's one of the most popular, widely used indicators for the stock traders. About the coronavirus, well, it is already affecting the markets. This week started with a reversal. This is interesting. I would be about the coronavirus, I would be very careful with going short, with selling coronavirus, with panicking about this, because all you need for a rebound is just a small information that they are working on a cure, and the cure already is bringing some effects, like a vaccine or something. Like we already know about this combination of AIDS injections and flu injections that they gave in Thailand, and it healed one person, and second one is feeling much better, but still has this virus, but is feeling much better. Any information like this that they found the vaccine cure can absolutely kill the bearish situation on the market and can easily spark the reaction towards new highs. So I would be extra careful with going short based on the coronavirus, because it's so easy to stop this panic. And also, markets tend to ignore certain news after a long period of time. So traders get bored with certain topic which they have all the time. Coronavirus is with us for almost 2 weeks, 3 weeks, and slowly traders, I think, will stop talking about this and be worried about this, unless the mortality ratio will grow above 3%. Now it's around 2%, or will suddenly turn into zombies or something. Then it will be scary. All right, let's move on. My friends, so as you saw, fundamental analysis is all about those. Well, it's all about the expectations, but fundamental analysis is also all about the numbers, inflation, unemployment, etc. Let's look, for example, at unemployment. As you can see, after 2008, unemployment in the United States is gradually going down. Beautifully, like nice downtrend. That partially explains why American indices are on all-time highs. In Eurozone, it was a little bit worse. As you can see, we had a small upswing in 2013-14. We had this Greek crisis, a crisis in Greece, and all those PIGS countries, Portugal, Ireland, Spain, Greece. This created like a small crisis in Eurozone, but also unemployment rate is going lower. Who can tell me what this chart is? What this chart is representing? This one. What is this? That's a difficult question. That's a difficult question. You need to observe markets for a long time to know what chart is this. You have the numbers 200, 0, 200, 400, minus 200, minus 400. I have a clue for you. What this chart is. From here, from 2008 to, let's say, 2012, 13, that was the most important data in the world. For traders, that was the most important data. Later, it stopped for a reason. What was that? This data. NFP, thank you very much. Non-farm payrolls. Non-farm payrolls. This data is published first Friday every month, and shows us the growth of the employment in US economy, excluding agriculture. So how many jobs were created excluding agriculture industry in American economy every month. This was the most important data in this time, because after the crisis in 2007, 2008, we wanted to see if the crisis ended and if companies start to employ people again, if they stopped firing people and they started employing people again. It stopped being the most important around here. Why? Because this data is more or less even all the time. And we already know because here we were, it was uncertainty if the crisis ended, if the recovery started. Now everybody knows that we do have a recovery. Even the top of the recovery, we have like a major job market, and nobody's looking at this data anymore. Okay, let's move on. My friends, inflation. Inflation is one of the most important data for the currencies. Who can tell me why inflation is one of the most important data for the currencies? And by the way, I can see S&P 500 on my second screen, and we start on the front foot this week. We started with a nice bounce from the support, and the price is aiming higher. I think this is a large influence from this vaccine, not vaccine, but from promising information about the cure on this virus. Okay, about inflation, I can see that you say that it's against the power of the currency. It shows the valuation of the currency. The valuation. Okay, I will tell you why it's the most important thing, because central banks, those who control the currency, like Federal Reserve from United States control dollar, European Central Bank from Eurozone, from Frankfurt, from Germany, they control euro. Bank of England, they control British pound. They have certain inflation targets, and they work on the inflation targets. They reach those targets usually using interest rates, changing interest rates. So by looking at inflation, we can estimate what will happen to the interest rates. And interest rates are the most important factor in terms of the price of the currency. So inflation is like a tool to understand the interest rates. Yes, James, very nice. It determines to a large extent the value of the currency. Yes, because inflation influences interest rates, and interest rates are the direct factor, tool for currencies. My friends, chart number 1, chart number 2. Chart number 1 is inflation where? Chart number 2 is inflation where? That's a test for us, for you. I think you are answering great for most of the questions. You are very skilled traders. So I'm sure you're going to get this one right as well. Beautiful. First answer and second answer and third answer. Perfect. First one is Eurozone. Second one is United States. Excellent, guys. Euro. At some point in Eurozone, we had a really big problem with deflation. So inflation was below zero. This is zero. In United States, that was just for a while. Central banks, one of the biggest problems for central banks, they wanted to fight with deflation. They wanted to fight with with inflation going below 0%. I'm gonna draw something, and you can tell me why central banks were fighting with deflation. Deflation is in theory good, right? Because it means that the inflation means that the prices of the goods are going higher over time. Deflation means that over time the prices of the goods go down. So in theory, this is a great situation for us because we buy stuff cheaper over the time, right? But why European Central Bank? They wanted to fight with the deflation. Here is the European king of the European Central Bank, and he wants to fight with, here is euro, here. He wants to fight with deflation. Why? Yes, deflation stops economic growth. Yes, my friend. So if you have a deflation, you are thinking like, why I should buy now if I can buy later, if I can buy it in next 1 month. So it creates a situation that companies are not selling their goods. So if they're not selling goods, they have to fire people because they don't need so many people to produce goods if they don't sell them. That's first thing. Another thing is with what we are buying stuff, not with cash. Not many people have cash, but we want to buy stuff. As they said, I think in the Fight Club, we are buying things that we don't need for the money we don't have to impress people we don't even like. Most of the people buy stuff with the debt. Most people don't buy things with cash because they don't have money. They borrow money. If you don't, and they borrow money from the banks, you borrowing the money from the bank and paying them back with the interest rate, with the commission, you are giving profits to the bank. Banks are having profits because of the consumers who are borrowing money. If you're not borrowing money because you don't want to buy stuff now, because you think that stuff will be cheaper next year, then it hurts banks. That's why banks don't like deflation, because they want you to spend money, they want you to buy goods, they want you to borrow money, they want you to keep spending. All right, this is why banks were fighting inflation, deflation, I'm sorry. And you could see that we do have a beautiful recovery from inflation going down to inflation close to the projections or in the projections. We do have drop of unemployment rate, so this looks like a pretty nice recovery. But look at this. This is not a healthy recovery that we are having right now. First of all, it's because of the printed money, and second of all, it's because it's debt. Look how big is the debt of the United States. All this recovery is 2009, 8, 7. This is the crisis. All this recovery is made on borrowed money, on printed borrowed money. It's not healthy. It works, but it's really not healthy. About the debt, look at the countries who have the biggest debt to GDP. Greece was one of those countries with the biggest debt to the GDP. Now they moved it lower because of all this crisis in 2013 and all those actions taken by other nations and institutions. But Italy still has big debt. United States still have big debt, for example. Spain, those PIGS countries. So in Europe, the crisis in 2014-13 was all about the PIGS countries. Portugal, Ireland, Greece, Spain, Italy, not Ireland. It was PIGS. Spain is still here, Italy is here, Greece is gone because they made those reforms and they got help from Germany, France, etc. Why nobody's talking about the Japan? They are on the first place about the debt to GDP ratio. They have huge debt. Why nobody's talking that there is a problem in Japan with their debt? Why? I told you this already on the first webinar. You need to connect the dots. I told you this on the first webinar about Japanese traders, retail traders who are trading a lot. Because they are borrowing money, Japanese government is borrowing money from their own citizens. They are issuing bonds for the domestic market. So they don't have to explain themselves in front of the foreign institutions like Greece. Greece, which had this enormous debt, they had to explain themselves in front of the government of independent country, had to explain themselves, be in front of the International Monetary Fund, World Bank, European Central Bank, and all those greedy banksters, right? So this is a crazy situation. In Japan, yes, they have a huge debt, okay, but it's international debt, so they don't have to explain in front of anyone. If deflation and inflation are not too good, what will be the right balance for an economy? Most of the developed countries, they target small inflation between 1, 1.5, 2%. And this is, many economists believe that this is the healthy value of inflations, of inflation. Okay, my friends, what is the most important factor for the currency? I already told you this. Please remind me. I have a short memory. No, inflation is second most important because it allows us to estimate interest rates. Exactly. Interest rate. 4 charts. 1, 2, 3, 4. What are those charts? What countries? 1, 2, 3, 4. 1. First one. What is 1? Japan. Thank you very much. JPY, let's say. Number 2. Number 2. What is number 2? USA. Thank you very much. Number 3. Eurodollar. Thank you very much. Number 4. British pound. Thank you very much. Excellent job, guys. GBP. All right, so these are interest rates of the major economies. When we are rising interest rates, what in theory should happen to the currency? Please tell me. If we are, this is to America, what should happen to American dollar if we rise in interest rates? In theory, what should happen in theory? Increase its value, not drop, guys. When we are rising interest rates, it increases the value of the currency because let's say it's all about it increases the cost of the currency. Okay, so currency becomes stronger, appreciate, beautiful. On the contrary, when we lower interest rate, what should happen to the currency when we lower interest rate? The currency is weaker, obviously, yes. Is weaker, the currency goes down. Beautiful. Just to make this clear, in Japan, we are flat almost all the time. Recently, we came to negative. In United States, we had drop here. Why we had drop in United States in the 2007? And I'm not asking about the currencies, I'm asking about the stock market. I'm sorry. Why? Why we had this in United States, lowering interest rates? Recession, thank you very much. So, you lower interest rates in order to fuel economy, to help the economy to recover, because you are making loans cheaper. You are making loans cheaper. So you create the ability for the companies and people to borrow cheap money that they can spend it. That's why you lower interest rates. And you rise interest rates because everything is fine, everything is nice, companies can handle themselves, people can handle themselves, they are doing good. So you rise interest rates to cool down the economy, to keep it in certain barriers. Okay, because if you wouldn't do this, economy would do like this and then this. But if you rise interest rates, you're creating this situation with the economy. All right. So you need to, those advanced traders, you already know about this, but beginners, and we have probably quite a lot of you here, need to understand that when the central banks, governments lower interest rates, it is usually negative for the currency, positive for the stock market. When we rise interest rates, is positive for the currency, in theory negative for the stock market. In theory negative for the stock market because we all know what happened in the United States. We are rising rates since 2016 and we were making all-time highs all the time because all this is broken. All this is broken because of the central banks and their reckless printing money programs. They broke all the all well-known economic theories. They are doing QEs, exactly quantitative easing, which is a fancy name for printing money out of the printers and injecting them to the economy. It wouldn't be so bad if this money would be coming to you, but this money is coming to the companies and governments, not to you. So this is it, guys. About the interest rate, there are some currencies which have negative interest rates. You already know Japan, but there is also Switzerland, for example, which have minus 0.75%. When you have a currency, let's say with positive interest rates, those are extreme. Argentina, Venezuela, Iran, Nigeria, extreme interest rates. But we have a lot of fellow Nigerians here, my colleagues from Nigeria, my friends. There is Nigeria, current interest rate 13.5%. How big is the interest rate in your bank? Let's say I put $1,000 into the bank, or let's say 5 million nairas, and what interest rate can I get in the bank a year? My friends from Nigeria, 5%, 2%, 4.5%. But still, by keeping money in a bank, guys, you need to Daniel, you need to tell Churchill and he or the G Adisa your bank, because man, you're getting 6% and they get 2%. They're losing money. Please share your bank details with them. What is going on? Come on, man. Those who get 2% in the bank, what is wrong with you guys? Why you're allowing yourself to get 2%? Oh, No, man, you wouldn't like to live in Venezuela. It's crazy there. My uncle was living in Venezuela for 30 years, and he escaped from this country now because it's terrible. Okay, my friends, coming back to this. So you put money to Nigerian bank and you get profits, but you put money into the Bank of Switzerland, to the bank in Switzerland, and you're losing money just for keeping there, let's say $100,000 or francs. After some time, if you would keep it long enough, let's say you would take 97,500 francs. Just for keeping money, you have to pay them. Why? Because of the negative interest rates. Negative interest rates, as we saw here, they force you, they maybe not force you, but they encourage you to spend money. Negative interest rates or zero encourage you to do something with this money. That's why stocks go up when interest rates goes down, because it's not worth it to leave money in the bank, because the profit from keeping money in the bank is not enough. So you take your money from the bank, you start to invest, you start to spend money, you start to trade, for example, right? This is why lowering interest rate promotes growth, and rising interest rates stops growth a little bit. But if Switzerland have negative interest rates, then why do ultra rich people still put the money in a Swiss bank? This is a great question, and I have no idea why people do this. Even like economies like German economy is issuing negative bonds. So, for example, in Poland, even in Poland, I think it happened recently. Like 5 years ago, when Polish government wanted to borrow money from the citizens, they were paying interest rate. They were paying you like 6% a year for the ability that they could borrow your money. But now they don't pay you nothing. You are borrowing money to the government. You are borrowing $100,000 to the government, and they give you back 99,000. Can you imagine this crazy situation? And it's happening in Germany, it's happening in Switzerland. This system is broken. This system is broken, guys. Yes, it's all about the safety, but come on, there should be some limits. I would never give money to the bank in Switzerland and they give me less. I would prefer to send it to my friends in Nigeria to invest in their country. What is going on, my friends? Yes. I'm joking a little bit. Obviously, you are right. People pay for the safety of their funds. All right. So those were the countries with negative interest rates. Those are the countries with the highest interest rates in the world. As you can see, most of them are like emerging markets currencies, still developing currencies. So it's usually like this, that developed countries have lower interest rate and developing countries have higher interest rate. We are getting nowhere near the finish, guys. We still have a lot of things to talk about, but I hope it's interesting for you. Now, presidential election cycle, because we are getting closer to the elections in the United States, and this is huge because there is actually a cycle from the elections in the United States every 4 years. They made researches and they found out that worst returns on S&P 500 you get on the first year of presidency. So let's say next year, in theory. The best results you get in the first year of presidency, so let's say in 2019, taking into the consideration current cycle, or in the election year, and this year is election year, we should get, according to statistics, a positive year on S&P 500. Here is another research. You have S&P 500, you have Russell, small cap stocks, Russell 2000. That's an index like S&P 500, but for smaller companies. And yes, this is right. Third year is usually the best. So considering this, it's 2019. Fourth year is also awesome. Here and here. And the worst are usually like second year of presidency. So according to the presidential cycle, we should get a good year. But it didn't start good. First, almost we had Third World War. Then first Australia was burning. Then Third World War, and then coronavirus. Come on. Give us a break, 2020. This year is crazy. And it's just January. Well, it's February, but it's just 1 month past. Guys, it is estimated that bear markets tend to happen in first 2 years of presidency. So there is a big chance that next year we'll finally get this correction, this recession. Coronavirus is trying hard to bring the recession, but so far so good. But next year, according to the presidential cycle, it is very probable. So if you can see, price data from S&P 500 index was compliant and average on a weekly basis on the period from 1942 to 2003. An analysis of this data suggests that lucrative investment strategy would have been buying during the second year of presidential cycle and selling out on December 31 of year 4. All right, so we would avoid most of the bear markets. Look at this. This table may be not showing you much, but investor one was off the market in first 2 years. So in our cycle, he wouldn't trade on 2021, 2022, but he would trade 2019, 2020, and 2023, 2024. And this would be the result. Well, this was the result. If you were on the market in the first, on the market for the last 2 weeks, and if you were on the market for the first 2 weeks, it's here. 2 months, 2 years, I'm sorry. Whew, a lot of data. I hope you understand this. Last 2 years of presidency are in statistics. They are the best. All right, everything is clear. Let's talk a little bit about practice and about central banks, my friends. ECB, European Central Bank, Mario Draghi. This is the old boss of ECB. He made all those decisions that I'm going to show you now. And you will see how powerful are those interest rates. I remember this like it was today. 2014, 8th of May, euro dollar. Euro dollar is going here. And 8th of May, Mario Draghi says that maybe we will lower interest rates. Let me see this here. Interest rates. That we will lower interest rates. It was somewhere here. And it was a shock for the market. It was an amazing shock for the market. Let me show you this. Because we went from here to here. In 1 month, we dropped almost 500 pips. But guys, they did not lower interest rate. They just announced it. They didn't do anything. They just announced it. So here we have a very important situation. It's called buy the rumors, sell the facts. On the stock exchange, you don't trade facts. As I said, you trade expectations. You trade the rumors. That's why stocks are going up today. That's one of the reasons, because there is an expectation of the vaccine for coronavirus. They are buying the rumors that maybe we will soon have a cure. Okay, this happened back then. Euro dropped because they said that they will lower interest rate. In reality, when they did this, the price should go down, right? But in reality, the price went up. They lowered the interest rate here, and the price was going up afterwards, because that's buying rumors, selling the facts. Traders traded that as soon as possible here. Once it became a reality, the price went higher. Another example, unexpected rate cut. You see, it's all about expectations. This rate cut was expected, but this one was not. And the price dropped like a rock on 4th of September 2014. The price dropped like a rock here and then continued to go down. 640 pips. 640 pips. You know how big is the pip right now, right? Because you are trading on a demo account. I hope you are trading on a demo account. Because now, if you're not trading, you have difficulties to understand what is a pip. I was telling this on the first webinar. What is a pip, right? And I told you to open demo account and play with the platform. Open long position, short position, axiori.com. If you still don't have a demo account, please go on axiori.com and open a demo account, because it's very unprofessional that you don't have a demo account. You should have demo account and practice instantly all this knowledge that you're getting here, because you will forget it. If you will not practice it right here, right now, you will forget this. And you are spending your time, you are here listening to me, so you made a commitment. So don't waste this commitment. Trade. I'm not telling you to trade on a real account straight away, but trade on a demo account. See how the platform works, and you would be able to understand that this drop is absolutely madness. Okay? Why? Because nobody was expecting this. Traders were not expecting this, and it took them 1 month to adjust to this situation. You see how powerful interest rates are. Even world outbreak of coronavirus, which is spreading all over the world, has no such power like unexpected rate cut. Another situation, Mario Draghi announces quantitative easing program. Quantitative easing, QE, we already talked about this, is no less, no more than printing money out of the blue, out of nowhere. They are printing money. Printing money should increase the inflation, right? Because it was the tool used by central bank to fight deflation. Where is it? Yes, inflation, deflation. Printing money here to fight this. Because when you print money, it should cause inflation. Like in Venezuela, they are printing money because their economy is totally dead, collapsed. So they have to print money, and what is creating it's creating a situation where you have big bags of Bolivar, their local currency, and with big bag of Bolivars, which you can see on gangster movies, you can buy a toilet paper. Okay, this is printing money. But in European zone, it was different. It didn't cause this spike in inflation. It caused only rich people getting richer. All right. This is printing money, which caused a slide in euro dollar here. 800 to almost 200 pips in 1 day. 200 pips in 1 day. Can you imagine this movement? How big is this movement? Here is another example. ECB makes quantitative easing program bigger. So more money being printed. Look at the reaction. Well, there's a steady drop, but then boom, this information hits the market, and then there is a drop again. But it's not only ECB, Norges Bank, so National Bank of Norway did this is the situation where they cut interest rates. So we have American dollar to Norwegian krone. When Norges Bank cut interest rate of Norwegian krone, it means that Norwegian krone should be weaker. So American dollar in the same situation should be stronger. And this is what happened. Boom, upswing. Guys, now a very important thing for you. Do you see the pattern here? My friends, do you see the pattern here from all what I showed you? Here. 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 My friends, there is over 100 people here today. Thank you for coming again. I'm gonna tell you something very important. Markets are always expecting something. Traders are always expecting something. If something comes as a surprise, that creates a great trading opportunity. Even if you are a bit late, when there is a major shift on the market, that creates you a trading opportunity. Look at this. Mario Draghi says that they will. Mario Draghi, so the government of European Central Bank, says that they will lower interest rates, and we are going down. Even if you are late, you know it's a major shift. You can enter here, 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 here. You would still be making money. Unexpected rate cut. Mario Draghi cuts interest rate unexpectedly here. Even if you was late here, this is such a huge and important event that you can enter here, 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 here with a short position, and you would still be on profit. Another example. Unexpected quantitative easing program. Even if you are late with this movement, you are still entering here, here, here. You can make money. Widening of the QE program. You are late with this movement. You can enter here, 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 here. You can still make money. Norges Bank in action. There is an upswing. You can still make money here because that's a major change in the policy of the central bank. And this, how are you supposed to trade the fundamental analysis, guys? This is one of the, let's say, I was running live trading programs where I wasn't giving recommendations, but I was sharing my trades. So as soon as I open a trade, I was sending this PDF to my clients with my trade, entry point, size, blah, 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 explanation, and a chart. And this, for example, I traded this trade. I remember this upswing here. So there was this change here, boom, correction, and I opened long position here, and the price went higher. That's one of the strategies, guys. Another example. Reserve Bank of New Zealand cuts rates from 3.5 to 3.25 unexpectedly. There is a downswing like this. You can still enter, and the price goes down. You're still on profit, even if you're late. Bank of Canada cuts rates from 0.75 to 0.5 unexpectedly. Here, American dollar is stronger, Canadian dollar is weaker. But still, if you're late, you can open here, 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 and the price still goes up. Riksbank cuts rates and widens QE. Riksbank is a bank of Sweden. So there is American dollar to Swedish crown. there is this reaction here, even if you're late. That's a dramatic change in the policy of the central bank and the price goes higher. You can still make money. But it sometimes goes the other way. Don't think that it's that this what I told you is an ultimate trading strategy. Okay? So sometimes it goes the other way. Bank of Japan, surprise markets with surprise movement to negative interest rates. So this is American dollar to Japanese yen, USD, JPY. American dollar goes stronger because of this information and Japanese yen goes weaker because they lowered interest rates in Japan. So the Japanese currency got weaker. Everything was normal. Then that was done at night. Then the price made a correction and I entered with my long position here. I bought it. I bought it because that's what usually happens. Here, 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 everywhere, right? I bought it, but I had a stop loss order here. Luckily, I had a stop loss order because the price didn't go as planned. Price should do this, this, and this. But instead of this movement, they went lower and closed my position on a loss. If I didn't have this stop loss order, I would suffer more. All right? About the demo platform, we have a webinar about the demo platform. My colleague Mitun explained the demo platform. So please watch this webinar and I will show you how to access it in 1 second. So guys, sometimes the market moves the other way and you cannot do anything with this. You just need to protect yourself with a stop loss order. Guys, I am here for you. Axiori is here for you. We have a full support on Twitter where we can help you with the outlook on the market. So I post there my outlook on the market. If you don't follow me on Twitter, do it right now because I post my market analysis there with the best setups that I can see on the market. And this is email for you, my friends. For all of you who don't know how to use MT4, have questions about something, want to watch other videos, want to access this recording from this video, you need to write your email here to support@axiori.com. support@axiori.com. Please send your emails, ask for the previous recordings, ask for this recording, ask about how platform works, how to open an account, how to transfer money, ask about everything because they will answer you. They have all the answers for all your questions. Videos, all the videos that were prepared already, they are there from free webinars. I will upload this video soon. Obviously, you have to go on axiori.com to download demo account because on demo you will learn how this moves, how this works. Guys, it's super crucial for you to trade on a demo account. And this is my Twitter account, my friends. Follow me if you want to get the daily dose of inspiration about the trading. I post the best trading occasions on the market that I see. And I think you will like it. It's explained in a very easy way. Oh, you don't need to have laptop to trade. You can use mobile platform. No worries. Everything is accessible from the mobile, my friends. And again, if you want to, because on a demo account you trade on demo money, right? On fake money. But if you want to feel how it feels how it is to trade on a real account. You can fund it only with $100. So you can open an account and trade with $100 only. You will feel these emotions to be how is it to be a trader. This is also good. But I advise you to open demo account first. All right, my friends. Yes, we will do mentoring, no worries. But later, we will do mentoring. You will be all informed. I will teach you how to trade. Okay, my friends, I hope you like it. And now, oh, thank you for this email about the demo account, about this address, about the demo account. When we will finish, there will be a place to rate this webinar. If you will like it, rate it. If you don't like it, rate it as well. Because if you don't like it, I would like to know your opinions about this this webinar. What should be improved, etc. Please rate it. Please post your feedback there. I really appreciate every comment, even the negative ones, because it's all about developing yourself and be better as in trading. If you want to be a good trader, you need to learn, you need to develop all the time. So again, thanks very much, my friends, and see you on Wednesday and on Thursday. And you cannot miss the next webinars because we are increasing our knowledge with every webinar. With every webinar, we are talking about more advanced stuff, and we are getting closer to creating your own trading strategy that you will be able to trade on your own. Thank you very much, guys. All the best.